Welcome to Making Tax Digital webinar number 3. I'm Derek Williamson of Goddards Accountants, and I'm a forensic accountant with some 40 years experience. And with my firm, we are pioneers in adopting accounting technology, and as a result, we've moved our practice into the cloud. That way we are MTD, or Making Tax Digital compliant, or HMRC. Before I start, just remind you that you can have a free copy of my book, Going for Growth. This is now available, and hopefully if you book that at the same time, we will put you on the list for a copy of our new book, which is Key Performance Indicators, which hopefully will be coming out in middle of April. Okay, why? Well, as far as HMRC are concerned, individuals, businesses, and agents are all starting to see the benefits of digitization. And in fact, many millions of businesses are already banking, paying bills, and interacting with their customers or suppliers online. And this is the direction that HMRC feel that the world is moving in, and that for many, especially the younger, this is how we expect to work and interact. And HMRC maintain that they need to keep up with this transformation, not just for those that have come to expect it, but for everyone, so that everyone can start to enjoy the benefits that come with it. So, the actual change required for businesses to comply with MTD, or Making Tax Digital, is that they must maintain digital records and they must submit data to Her Majesty's Revenue via new Making Tax Digital APIs. So businesses need to ensure that they are using MTD compatible software. So, first thing is it relevant? Well, if your turnover is above the VAT threshold, namely £85,000, and you're not currently exempt for filing VAT online, you will be affected from the 1st of April. Strangely enough, if you're Plymouth, Brethren, or other nominated exception, you may continue to use your existing systems. If you're voluntarily registered, you may continue to use the existing portals, i.e. you registered but your turnover was under £85,000. If, however, you do not comply with any of those, then the new system applies to you. To be perfectly honest, if you are already filing online, then logic says, why not grasp the nettle and comply with the requirements? So, what do you need to do? Well, the first and most important thing is you urgently need to register on the new HMRC Making Tax Digital Portal. It's easy, you go in there and they will then, you put your VAT number, your unique tax reference number, and when you've done that, they will then give you a new portal number. It's the first thing. The second thing is to ensure that your accounting software is Making Tax Digital compliant. And the third thing then is ensuring you're compliant. And so what we'll now do is just look at these 5 items that I referred to. So the first one is that you need to register. If your agent, i.e. your accountant, is submitting VAT returns via his portal, you must ensure that he is registered and that he's linked your registration to his. You cannot assume that he's done it. You need to ask him. We've actually confirmed to all of our clients that we have indeed set up the portal and that we have registered them. That way they are protected. If you haven't had such a conversation with your accountant, you need to do so now. Second thing is, make sure your software is Making Tax Digital compliant. I put a list there: Quickbooks, Xero, Sage Online, FreeAgent, and Kashflow and Clearbooks are some of the major products that are MTD compliant. I would also suggest that you use Receipts Bank, because Receipts Bank dump the data into all of the above, and it saves time and money. It may well be that you're actually using a spreadsheet to record your data. Well, if so, you will need to purchase a bridging software package, such as Zoho, VitalTax, F_MTD, or Quickbook Bridge. Why not ask our team about your options? All of these have been recognized by HMRC. So please, if you are using an Excel spreadsheet, make sure that you have the appropriate package that will talk to the revenue. Unfortunately, with digital comes some downsides. The first of these downsides is that, in fact, you must enter the data daily from the sales, not weekly or monthly. Historically, lots of small businesses would do a weekly or a monthly summary of sales, which was then inputted onto their accounting package. That you can no longer do. It must be daily. If you're using a till of some sort, EPOS is very good. There are plenty of easy little packages that you can now take and post the data through straight into your accounting package. You'll notice I say you cannot post statements, it must be individual suppliers' invoices. HMRC last week have backtracked on that. If in fact that is what you have been doing historically, you may now notify the revenue, and if they issue you with a permission, you may continue to post statements from your suppliers. If not, you must post individual suppliers' invoices. And again, I would remind you that if your registration was a voluntary registration, you can continue to use the existing portal until the Making Tax Digital quarterly corporation tax returns are implemented. Again, let me repeat, ensure you are compliant for VAT by the 30th of April 2019. If you or your accountant have registered on the portal and are using MTD compliant software, then you are okay. If not, please check. You don't want to suddenly discover you're on the receiving end of a fine. Not surprisingly, as of April 2019, because firms will now be signed up for the VAT, it will be possible to file quarterly statutory accounts with HMRC. And this is to ensure that the software works effectively. No payments will be required against the tax computation. Please note that as of today, if Brexit doesn't interfere, as of the 1st of April 2020, limited companies will be required to compulsorily file quarterly corporation tax returns. So, logic says, why not start preparing quarterly accounts as though filing with HMRC? By filing quarterly accounts, by preparing quarterly accounts, you will get to know whether you need to make provision for quarterly adjustments to reduce the filed tax. The last thing that you want to do is to be running a seasonal business and find that you make a massive profit in the first quarter, but lose money in the second, third, and fourth quarters, because then logic says that you need to file a provision against those losses in the first quarter so that you only end up making a profit in the last quarter. And that is because at some point, and the revenue have not yet defined it, at some point in the future, you will be required to make quarterly corporation tax payments. And if you read the Act, if you make a payment, you will not be able to recover that payment if the next quarter is a loss, or the quarter after, or the quarter after. You will only be able to recover any overpayments of corporation tax when you file the reconciliation, which is done at the year end using the accounts that are filed with Companies House. So if you made £100,000 profit and ended up paying £20,000 in corporation tax, you're not going to feel very happy if each quarter you've got losses and you then end up at the end of the year with a profit of only £10,000 and therefore a tax liability of £2,000, and you're now having to wait to get your £18,000 overpayment back. In fact, the chances are you may well have gone bust in the meantime. So please bear that in mind. Start preparing quarterly accounts. HMRC work on the basis that every business is doing this anyway. So that being the case, don't be surprised. Well, thank you very much. If you've got any questions, please phone me on 020-8941-2187 or email on derek@goddards-accountants.co.uk. And if you haven't got them, please ask for a copy of my books, Going for Growth or Key Performance Indicators. Thank you very much for listening, and I look forward to talking to you when my Making Tax Digital webinar number 4 will be going out at the end of this month, just prior to the implementation of the new MTD system. Thank you very much. Goodbye.